What is going on, guys? Colt Mosdef here, back with another video, and in this video I want to break down how I made over $3,000 on this one trade that I took today, and obviously how you guys can copy my strategy step by step. If you guys have been looking for a mentor, someone to just guide you and show you step by step how to trade properly and how to get to 10K a month, I just did open up 5 spots to my one-on-one mentorship. The only way to apply though is to click the link in the description and book a call with me. And if you want to, you can also go to my Instagram. There is a link in my description and you guys can send me a quick DM so we can chat more. So without further ado, let's get in my computer and let's go over this setup. So today I was trading the NASDAQ or NQ. And the markets were honestly very choppy. Overall though, we were in an uptrend, so my immediate bias for the day was to go long. When I did start trading, it was a little bit later in the morning. I showed up around 11 a.m. and I did not intend to trade today. I just opened up my laptop, and I feel like every time that I don't put resistance on trading, when I'm not thinking to myself, oh, I need to trade today, I need to make money, things go a lot smoother. You guys can actually see that I am up $46,000 for the week trading using this exact strategy that I'm going to show you guys. So what did I do to catch this trade right here and to make over $3,000 on this short position? When I mean short, I'm saying the duration of this trade was just a couple of minutes long. I didn't go short, I went long. So when I was looking at the market, let's go to the replay mode right around here. So when I was looking at the market, we did have this fair value gap right here. And if you guys want, you can go and type in FVG. And this is the fair value gap indicator that I am using. It is pretty cool because if you guys go to the settings on it, you can actually choose multiple time frames. So I could have just this time frame, whatever chart that I'm on, it will appear. I can also turn on another one, so I could have maybe the 5 minute, and I could put M5 FVG, and then we could see that we have a 5 minute fair value gap right here. If we go back, we have a 5 minute fair value gap right here. So it kind of will allow us to see fair value gaps that are on multiple time frames instead of just relying on one time frame. One thing that you guys also can do, I'm actually turning this off real quick. One thing that you guys can do when you guys are trading that I've been doing a lot of is if you guys go right here to this button, you can have multiple time frames laid out. So you could have like the 15-second right here. You could have right here the 30-second. And then right here you could have the 1 minute time frame. So you could get a bias on all these time frames and see exactly what is going and seeing if there's any confluences. But when I was taking this trade, I think I was on the 1 minute today. Yeah, when I was taking this trade, I was actually on the 30-second time frame. So I saw that we had this fair value gap right here. Price kept going in and out of it, and I knew that at some point this thing was going to explode. So let's go back and exit out of this so I can show you my actual executions and it will make more sense. So I saw that we had this fair value gap right here. And that's when I knew that price was going to retrade into it. So right on this candle is when I actually bought into that FVG right here. And when I went into this trade, I did have my stops a little bit lower right down here. Usually I have my stop loss right below the first candle that makes the fair value gap for a bullish fair value gap. And then I have my stop loss above the first candle that makes the fair value gap for a bearish setup. So this is a bullish setup right here. And simply what I did is I went long right in here, and I was going for like a 1-to-1. I was not trying to really be in this trade for too long. I knew that it was just so volatile. That's why I only risked 10 contracts as well. And I was just aiming for these previous highs right here. And that's where I got out of this trade right on this candle. So as price came in, it hit my entry. It kind of was messing around for a little bit, but overall it wouldn't hit my TP within, you guys can see, within 4 or 8 minutes. Actually 4 minutes. I was on the 30-second time frame. I totally forgot for a second. But that's really all that I did. I have been using the fair value gaps to find my entry and the best depiction that I can give you guys. So when we're looking at market structure, we want to see lower lows, lower highs, lower lows, lower highs, and lower lows. And vice versa for an uptrend. What do we want to be seeing? We want to see higher highs, higher lows, higher highs, higher lows, higher highs. Now, when you guys are looking at market structure and you're seeing it push up higher and higher, when we are making these lower lows or these higher highs, in those higher highs or lower lows is where you want to see the fair value gap be created, and then you want to see the lower high retrade into the fair value gap and move lower. For an uptrend, you want to see the higher high create the fair value gap, and then you want to see the higher low retrade into the fair value gap. So my two entry models that I use are fair value gaps, but what you also can do, and you can use these in confluence, is you can get the Fibonacci retracement. You can go from the previous lower high to the lower low, and you can watch for the lower high to retrade into the 6.2, 7.05, or 7.9. Here are my Fibonacci retracement levels, or the setup. If you guys want to copy it, take a screenshot right now. And then also take a screenshot right now. And once you guys set up your fibs, they should look identical. So now when we're looking at the market, we have multiple confluences. We could see a fair value gap form, but also we could see the fair value gap align with the 6.2, 7.05, or 7.9. What I have noticed is when you guys use the Fibonacci's and you're looking for these key levels to be hit, it will give you a much more optimal trade entry, because sometimes the fair value gap will be a little bit lower on the actual lower low or higher on the higher high, and it won't give you as deep of a retrace. But if you bring up the fibs, usually at the 6.2, that's where you're going to get your entry most of the time. And then you have your TP at the negative 100, and then you have your stop loss right above at the 100 level right here. And you guys, when you use the fibs, you can get some insane risk to reward ratios. I'm talking like 3-to-1s, 4-to-1s, 5-to-1s, like absolutely insane. So the same thing applies with an uptrend. Get it from the previous higher low to the new higher high. What do you want the higher low to dig into? 6.2, 7.05, 7.9. So you can ideally use the Fibonacci's with the fair value gap to get confluences, and that will help you guys see a setup, and it will make much more sense. And the probabilities of it doing that and actually hitting your TP are going to be much higher. And you can also add in like candlestick recognition. You guys can add and see if there's any like reversal candles closing at or above the Fibonacci's or the fair value gap. There's so many things that you guys can do, but realistically, the only entry models that you guys need to use are fair value gaps or the Fibonacci's. If a setup is not there, and the first thing that you need to look for is market structure. You need to see lower lows, lower highs, lower lows, lower highs. You need to see very, very clear market structure. No real professional trader is trying to trade in these choppy markets. And that's why when I actually took this trade today, you guys can see like we made this higher high and this higher low. This whole area right here, I would count is a higher low. And then you guys can see it eventually pushed up and made the higher high, which enabled me to hit my take profit. But these were not like the best markets to look at. Yesterday, I actually took a really, really nice trade during the Asia session right here. So I saw that we had this fair value gap right in here form, and that's where I took a buy right here at this candle. Actually, it wasn't this fair value gap. I went off of this fair value gap right here. So I saw price was coming into this fair value gap on this candle. I bought right here on this candle, had my stops right below this candle, and you guys can see I sold right on this candle as it went and hit previous highs. So it's important that you guys can identify market structure. That's the first thing. Then you want to look for these higher highs to form with a nice fair value gap in it, and then a higher low to hit the fair value gap. And then once the higher low or the lower high is starting to form, that's when you can usually bring up the Fibonacci's and add those in confluence. But I hope you guys enjoyed this video, and I hope you guys got value. I'll see you on the next one. Peace. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend.
Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.